Hello and welcome to another update video about Cardano. In this video we're going to take a look at the Cardano chart and just want to provide some context around it. So I'll just show you where we were yesterday and then we're going to dive into the Cardano chart. There's now a chance for Cardano to turn down because it has come down impulsively here again, retesting currently here that support level or former support of that rectangle, and we're now here at a key moment where Cardano could move down when it's retesting that. And I mean, we are waiting for lower prices for Cardano because the downside potential is not over yet. Okay, so this was yesterday where we were. We formed a so-called rectangle pattern here. I showed you the support line of that rectangle in orange. So we had a kind of a rectangle, a range between that orange support line and here the Fibonacci level, which is the 97 cent level, the 61.8% Fibonacci retracement level. Yesterday we were just retesting it. Yeah, we were retesting that here on the 4-hour chart, and yeah, we did it. And then we saw here an engulfing red candle. To be honest, it's only on the 4-hour chart. So overall, compared to that previous low here at 87.5 cents, we have not yet made a lower low, but we're getting close to it. Okay, and as I said yesterday, as long as we are not moving above at least the 90 cent level, but better the $1.01 level, which is important support and resistance as well. For example, here we had resistance here on the 23rd of March, had resistance here on the 1st of March, support all along on that $1.01 level here around end of January. Yeah, so that is a very important level. But as I told you, as long as we are, because we came down so impulsively, as long as we are in a downtrend, which means we're not making higher highs and higher lows, I have to assume primarily that we are coming down lower. And that is very, very, it just takes the emotion out. So to keep the bias out, you just have to look at the chart and understand if we're in a downtrend or uptrend. We're clearly here in a short-term downtrend. Yeah, we have come down very, very strongly, and we are now, or we did just consolidate in this range and the rectangle pattern, which just means you're just moving sideways, because you can have a flag pattern, which would mean that you ideally go maybe up in an ascending wedge or a triangle or something. That would be a pennant, but this is a rectangle. Yeah, but you can call it a bull flag, a bear flag as well, which just means you're consolidating after a strong downtrend. And as long as you're not breaking above previous highs, you just have to assume that you're still in a downtrend. And however, it was a bit like 50-50 nearly in the rectangle, but yesterday we had broken out already and we were just retesting, so it gets more likely that you actually continue the move down. To avoid any fake outs, it's always advisable to wait for the daily candle close. Now, if you look at that, you can actually see that here on the daily, we've now spent 2 days outside of that rectangle, and yeah, that is quite a bearish sign, which doesn't mean it couldn't turn around, but the likelihoods are just decreasing. So what am I looking out for now? I'm actually looking out for this low here, the 87.5 cent level. Below that low, lower lows will be possible, and we could see quite a substantial sell-off. So on that level, obviously we had support here, but we had support here as well in that region, and a lot of historical volume going on as well. Therefore, it won't be easy here to break that 87.5 cent level. But if it happens, then you're going to see probably prices around 78 to 75 cents. And that would bring Cardano closer to my target area here between 55 and 30. Now, to make that clear, Cardano doesn't need to get there anymore. Cardano already made or did what it needs to do in the current correction. We talked about that various times because it completed a proper impulse down. Yeah, we can count this all down probably already as a 5-wave move, and we need to understand that the wave A was here around $1 and we came lower in the wave C. So the wave C here, which I currently have in the yellow box, but it can already be complete. So the chances are there for it to turn around. It fulfilled the minimum requirements as per the Elliott wave theory to complete a correction, but it doesn't mean it has to have completed it. Yeah, so the downside potential is still very much there, and the downside potential is there until we move above 126 and even better 163. Until then, the risk that we come lower is very, very much there, and it doesn't currently seem to like the idea of forming here an inverse head and shoulders. technically still possible, but of course getting less likely the further we drop. What else? So yeah, we are probably heading here further towards that 75-cent level. Only exception if we manage to get back above $1.01, and I think then we can get up to 126 fairly quickly. But as I said, as long as we are in this downtrend and are not making it above $1.01, I will assume that we are coming down lower. Looking at the indicators, on the 8-hour we have now just seen here a bearish crossover on the MACD. That is not bullish. On the 8-hour chart, we've also not been able to move above the 50 level of the RSI, which is so important. Especially Cardano seems to be adhering to that 50 level. Below 50 is bearish. And here we don't have, or we even have a short signal here on the ADX and DI indicator here as well. Cardano was reducing negative momentum. It's now flattening out, similar to Bitcoin. But again, we still had that short signal here as well. So not bullish, yeah, and the RSI is also below 50. So looking at that generally, yeah, I think it's not looking bullish at least, you know, and it seems to be rolling over again, rolling over further, continuing that current downtrend. We can also take a look at the moving average here. So the 200-day moving average is up here, currently sitting at 155. Oh no, that is the 1 year moving average. Let me just change that to the 200-day because it is quite relevant. So that is currently coming down here, pushing the price down probably as well. It's still far away from the price, so we can take a look and add the 50-day moving average just to see where that might be at the moment. And where is it? Here. So that is currently here in orange. So if I zoom in, we can see that that is actually pushing the price down as well. So understandably, it was very hard for Cardano to move above this sort of rectangle, above the 61.8% fib level, because we have also not only the 61.8% fib level, a cluster of resistance, but also the 50-day moving average, which is providing additional resistance as well. So that will be interesting. To go through here will be difficult, and therefore this is pushing the price down as well. Can have a look where the 20-day moving average is as well, just to have a bit of a short-term view as well. And this is now coming down here even more strongly and pushing the price down as well. So if I hide the 20 again and we add the EMA ribbon on the daily, you see we had a short signal here as well on the one on the 15th of April. Now that has played out so far. And if I go to the 4-hour chart, we can see that we are being held down by the EMA ribbon. And yeah, until we break above at least the 4-hour EMA ribbon as well, we don't need to think about rising prices. Okay, so that is currently here my view about Cardano. Hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then check out the channel membership. Thanks a lot for watching and see you in the next video. Bye bye.